Welcome to Tony Byrne's View with news you can use. Tony has over 32 years of experience as a chartered financial planner and wealth manager. Tony's passion is to help you retire early and live the life of your dreams with no financial worries. Now to today's episode.
Welcome to today's podcast. The subject today is capital gains tax is changing, or is it? So, why such a mysterious title? Well, capital gains tax, like inheritance tax, is a capital tax as opposed to a spending or income tax. Personally, I dislike capital taxes, especially because you've already paid income tax and national insurance on your hard-earned income, as well as a myriad of indirect taxes such as VAT. So it really seems a very unfair tax to punish you by making you pay further taxes on income that has already been taxed in various ways. This is why I particularly like offshore tax jurisdictions where no capital taxes apply, such as in the Isle of Man or Channel Islands, which are our very near neighbours. I've always wondered, how much does it actually cost the government to collect these capital taxes? Because when you weigh that up against the small amount of taxes that are actually collected in the form of capital taxes, and you compare that to the amount of wealth and jobs that could be created by welcoming more wealthy individuals into the UK, you do wonder if there's probably a net benefit in abolishing capital taxes rather than applying them, because the advantages seem to outweigh the disadvantages. For example, in 2017/18 tax year, capital gains tax yielded the government just £8.8 billion, and inheritance tax brought in £5.2 billion to the exchequer. Now, that may sound like a lot of money, but when you think about it, the actual total tax revenue for that tax year was £754 billion. Now, that means that the combined capital taxes of capital gains tax and inheritance tax brought in altogether only 1.85% of total tax revenue. Only 1% of people pay capital gains tax and less than 5% pay inheritance tax. So it does beg the question, what is the total net gain from applying such taxes which seem to affect so few people and so little taxes raised? Of course, taxes will always be around, and we can't really argue with that because there is a need. We do have to have a public sector. You do have to have hospitals and schools, etc. So we do need to have a public sector. But as Benjamin Franklin once famously said, in this world, nothing can be said to be certain except death and taxes. Personally, I beg to disagree because, of course, red tape is probably even more certain than those other two subjects, although it does sound a bit perverse to say that. So maybe the saying should be, there's nothing more certain than death, taxes and red tape. Anyway, what made me produce this podcast today was the Office of Tax Simplification recent announcement that they are reviewing the complexity of capital gains tax. Now, the so-called Office of Tax Simplification, or in abbreviation OTS, was created back in 2010. I found the name so laughable. It just reminded me of Yes Minister and Sir Humphrey creating such a ridiculous name. Of course, the mere idea that the government would create an office that would simplify taxations is laughable, because the one thing that governments never do is create anything that's simple. It's always complex. And as soon as you hear the word simplification, to me, that's usually code for more complication and greater taxes. So forgive my cynicism. But the other reason why I'm cynical is because ever since its existence in 2010, the OTS has put forward numerous proposals to the government to simplify taxation, and virtually none of them has ever been adopted. It seems hard to believe it, but income tax, for example, was introduced in 1799 as a temporary measure to cover the cost of Napoleonic Wars. Well, I wish this temporary measure would go away, but clearly it never will. So, Rishi Sunak, the Chancellor of the Exchequer, did contact the OTS fairly recently to review capital gains tax, as I mentioned earlier. Now, an online survey was created for businesses and individuals to make their comments. Unfortunately, that deadline has already passed. That was the 14th of July. But the survey is still open for more detailed comments up until the 12th of October. So by all means, go on there if you feel that any comments you make might make any difference to what the government proposed. Now, what I can give you is just a few examples of some of the questions that were asked on the original survey. So, for example, have you ever reported capital gains to HMRC? Your approximate CGT liability in the last tax year? Which aspects of CGT took you the longest? Did you use tax or accounting software? And numerous other questions. So that's the first stage, this online survey on the 14th of July deadline to submit. There were also some more questions from the call for evidence document, particularly relevant for mainstream financial planning. So I can just give you maybe a couple of examples of these. For example, in your experience, to what extent do individuals or their agents arrange to time disposals of assets in such a way as to maximise the use of their annual exemption to manage down their tax liabilities? Another question was, could there be a simpler or more targeted way of taking small gains out of tax, and so on? Now, I've no doubt that they mean well, the OTS, and they genuinely think that this by engaging the public and getting answers from business owners and businesses and individuals, that they feel the government will take some action to simplify the tax. But for the reasons given earlier, I very much doubt it. My dire prediction is that if the government, unlikely as it may be, if the government were to implement any simplification proposals by the OTS, I think there'll only be two results. First of all, capital gains tax will become even more complicated, and government tax revenue from CGT will rise. Now, the reason I mention this is because we've had previous proposals like these. For example, pension simplification, which came in 2006. What did that do? It resulted in more complication and more taxes on pensions. So it does seem likely governments will continue to do what they've always done, and create increased complexity and try to raise more taxes one way or another. So bearing in mind that this may be adopted by the government, this could be an opportune time, if you do have any capital gains, to realise them this tax year, particularly before the budget, which occurs in March, to make sure that that any taxes you pay are at a probably lower rate than may apply after the budget, if indeed any of these proposals are adopted. So, if you do have a capital gains tax issue, now could be a good time to raise it with us. You know it makes sense.
Thank you for listening to today's episode. If you enjoyed it, don't forget to share it with your friends and family. For more information, head to www.wealthandtax.co.uk.